All right, so here we go. I think I missed another day of streaming yesterday. I was looking, but there was a lot going on and some technical issues that I had. So we'll cover what I did yesterday, as well as I didn't really do anything today, but some of the trades from yesterday actually did um, roll over into today and ended up being a winner. But yesterday I took a couple of losses, and what I realized was I wanted to stream about this, but it wasn't a time. The time that I was looking at it wasn't a good streaming time because of the ambient noise that was going to be around during that time. Anyway, what I saw was uh, essentially I got faked out. I looked at the market and I thought I saw like this right here. And so this is a classic bullish divergence, lower low and higher low off the momentum, lower low off the price. I wanted a piece of this at the 750. Um, it didn't. It never hit profit, I think, and I just ended up getting stopped out uh, from this right here. From this candle is the one that killed me. This candle stopped me out. Um, and then, I had the backup order at 675, so I got picked up on that, and I thought, okay, well that one should hold because divergence is just getting more and more obvious. But then that got stopped out right here. And so yeah, I mean it's hard to uh, justify the loss, except to just say like, hey, just sometimes that's what happens. I don't think I did anything wrong here. I saw the divergence. I took it at the quarter below. That didn't this one or I took it at the quarter below, which was right here. Maybe this was a little bit too close. Usually I want to give some room because usually when you first start a divergence, that doesn't mean um, my general routine is don't like give yourself a quarter or two in between, not the closest one, but the next closest one. And so this one would have been the closest one, and this one would have been the next closest one, the backup order, right? So maybe I should have done that one, but that one didn't work either. What did end up working was, uh, and I don't know that I want to do this going forward necessarily, but I have done it in the past before as well. It's the 575 is what would have worked. So it was very close. I took a bunch of losses there. Um, I took two losses there. 750, 675 both didn't work. The 575 is what ended up working. I didn't take a 575 there though. The 575 would have gotten to 825, completed a quarter beautifully, easily. Um, so I guess the lesson here is if you the spot the 30 divergence. Um, this one was a little too aggressive. Um, the 750 was too close, and I always want to take two, right? One front order, one backup order. Okay, and my front order should have been the 675 and it should have been 575. I usually don't separate them on two quarters. That's usually not what I do. Uh, but I don't see a reason not to do it. Especially in this case when it's in that area where it's like, okay, like I'm trying to be like maybe I was trying to be too stubborn or strict with the quarters rules. Um, Whereas like it's a good way to remind yourself. Like for me, it's like, oh, I gotta remind myself that this isn't the actual index. This is a derivative of the index. So there's a lot of spread happening, and um, price movement can get lost in translation because this isn't the actual price of the index. This is the actual price of a derivative of the index of what I'm of the index that I want to be trading. And the only reason I want to trade this is not because I particularly believe in the index in the Dow fundamentally. Um, it's just the best fit for a quarter strategy. So I'm actually kind of doing a lot of things kind of backwards. Um, so it's important to remember to have some flexibility in which the quarters strategy is very conducive of because it's so simple. It provides a lot of room for flexibility, and I need to take full advantage of that. And maybe I didn't. And this is an example of one where it kind of cost me. Um, so then we're stuck in this range for a little bit, right? It's kind of like what do you call this? What do you call this formation? You're getting lower lows and higher highs. It's like the reverse of a consolidation. Like it's the gap is widening. That can't happen for that long. And you're seeing like from here from like this little wedge, it's like a reverse wedge. It's going up, higher and higher here, and lower here. That doesn't last for very long. That's usually an indication something's going to happen in the is something's going to break, um, because you're growing the imbalance. You're not applying pressure to a current balance. You're growing the imbalance like it's already starting to pop. But it's just you have the advantage if you can spot it of it popping slowly. Uh, the clue here though is that it's going to pop to the upside because of the increasing in momentum. So that was my bias, which had me take uh, the aggressive trade, which I don't really do anymore, especially after back-to-back losses. It's very psychologically difficult to just be like, you know what, I'm going for it again. But I did, and because I saw this, because I saw increasing momentum, even though it's below 40, I saw like divergent, bullish divergent momentum. I saw a another kind of kangaroo tail. I don't know. This is a little bit maybe too big of a body to be considered a hammer candle or a kangaroo tail. Whatever. The point is, it's the wick is bigger than the body. Is really what I'm looking for. If the wick is bigger than the body, I'm looking for a bullish engulfing candle in addition to the RSI momentum going upwards, and to establish a bullish bias. Once I got that on the 30-minute, and I got a more obvious one later on, after that with this candle, I wanted, I saw that it was going to go, I put this limit order back here. And I was like, you know what? I want another piece. I want another crack at this. I think this will hold. I think this was just a stop hunt. You can never really completely avoid that. It just happens. It sucks. It sucks to get stopped out when you know you are right. For me, that's the worst psychological event. Is like, hey, I was right, but I was punished still. Or I was right, but I wasn't rewarded for it. Instead, I got punished for it. Right? It's like that gap of like what I should have gotten, the shoulda, woulda, coulda, versus the reality of what actually happened. The gap is so big and is very psychologically damaging for me. For me, maybe other people can withstand that more easily, but that's for me. That's one of the toughest things to recover from mentally. What helps is to have objective, factual pieces of evidence to re-engage and kind of try to practice having a as short term of a memory as possible. So knowing that the momentum was still heading upwards, that my odds were like in favor of going long, not short here at this point. The short run is already done on this time frame. Long term, I do believe that we'll see I do believe the Dow will crack below 30,000. Uh, but as a day trader or a short term income trader, that doesn't no like I don't care about that at all. I care about what it's doing, like in the range of where I'm at right now. I care about the game today. I don't care about the entire season. That's not the way to think. I care about the game, the quarter, the minute, the possession, the that I'm playing right now. Am I on offense or am I on defense? Like I care about like being present in the present moment. So what that meant yesterday was that I actually somewhere around here I thought that you know what, I might not ever get picked up on the 675, and that would exacerbate my FOMO. Um, if I'm gonna lose or if I'm gonna feel hurt again by a either a loss or a FOMO kind of thing, I want it to be like when I'm inside of a trade, like when I'm inside of a quarter, like participating on the way up. So I took a buy stop order. I got picked up on it, and I woke up to profit. My problem with this is, which is great. I don't want to overstate that the the feeling of like, oh my god, of it being rewarding, of like, hey, it paid off. Um, if I was up earlier, like or late, whichever way you want to think of it, there is this 30-minute close. I wonder if it's the same on the hourly. Um, oh, of course, I just ruined this stupid. I just ruined it. I just ruined the candles because this platform sucks at charting. You can't switch time frames, otherwise you won't get the latest uh, candles printed. It's awful. It's just terrible. Like that is such a that's not okay to have that problem if you're going to give this software to your traders to use. Like it's atrocious. So this isn't a review video of the product. I'm just saying, just because I switched time frames, now you have to like imagine what I'm talking about because I just all the candles between this is where the price is now, but all the candles from here and here just disappeared. Buggiest software ever. Or charting platform, buggiest charting platform ever. It's awful. Um, so try to imagine it. There was an hourly close, I believe, above the 750, and the other thing that I realized, as I was kind of reverse analyzing I got to go back to the hour. I'll just talk about the past since the chart won't show me the present. So the thing about looking at this, I was looking at this very obvious downtrend and wondering why I didn't jump on any of it. Um, and I think I had a little bit too big of a focus on looking for reversals, with the divergence, that I was missing these very obvious red candle, retracement, red candle, retracement, and not as quite as strong of a red candle down here, but a very big one and retracement. This is I'm not even really looking, but I know that this is a Fibonacci retracement. It's even more obvious on the 4 hour here. If we were to just look at these, or even these, bearish engulfing 4 hour retracement to the 50%. Bearish engulfing again here, 50% retracement here, or even this big one. If you look at it, if you measure it with the big one, then from the beginning of the move from here to here, then this is a deeper retracement. If you're gonna count all the wicks and stuff, I usually this kind of candle usually fakes me out. Like I don't know how to interpret it because it kind of looks like a 4 hour kangaroo tail that, like, if you couple a bearish or a bullish engulfing 4 hour with a little bit of divergence or increase in RSI momentum, that makes me want to go long on this. on the long term, but I have to remember that this is a 4 hour chart. Um, so this one kind of confuses me sometimes, but this candle, very obvious, strong imbalance of orders to the downside based off of two previous doji candles. Very strong, 50, 50% retracement. Very strong red candle. This one wouldn't have worked. It came all the way back. This one was a deeper retracement. So nothing always works, like, but it worked twice for very obviously successful big quarter moves, 250, 250. This one, if you took it all the way, I don't know how you would have justified this one, but if this one, instead of not the Fibonacci, but this zone right here, rally based drop, is beautiful. It's not perfect, like it's not perfect because it didn't make a new low, but it's damn near close. So you could have easily justified the 425, and then taking the front one, and then using the 500 as a backup one. The 500 one wouldn't is I this one, if I'm only looking at this one, it's like you have evidence to do 425, 500, and 575 because you have a zone over a zone. So that one, like, you have a decent chance of one of those three traps panning out. um, anyway, so these are just examples of, like, man, these are some obvious tells in the market that, obviously, hindsight being 2020, it's easy to see everything in hindsight. But those are some obvious ones. This one isn't as obvious of a. It's not really an engulfing candle. It's just a strong red candle, where the same thing worked. It ended up working, and then around here is you can't see it, but this is where the momentum, I think, changed up, and now you're seeing blue candles. So you do the same thing with blue candles. This is like, even if you'd be late to the party if you weren't using RSI on a lower time frame to spot the reversal from divergence or something. But if you only used it based off of the 4 hour, the shape of the 4 hour candles, like what stands out to you, this would have worked. 50% retracement. This would have worked. Deeper retracement, but I don't know. You would not have. This is where you wouldn't have been able to catch the full quarter, but at this point, you should be playing this bearish engulfing candle for almost 50% retracement that you may have missed. You would have needed to play the 500 to the T for that one. So that one, it worked, but you would have needed to front run it a little bit. Same thing with this one, 50% retracement. Like, it doesn't always work, obviously. I'm trying to be objective and showing the cases where it doesn't work. But it works often enough that you can use it to jump on trends, and that's one of the things that I want to, like, I wasn't flexible enough to switch from being range bound to trend following. So we had a trend from for like a week, and I wasn't flexible enough to recognize it. And, like, when could I have recognized it? Well, after this is your first clue. This is my second clue. And I remember looking at this candle right here and thinking that day, oh man, I missed out on the 500 down to the 250. Oh no. And what is it going to do below this? And so even after it broke this, I was just like, oh, am I looking for reversals from down here now? Like, I wasn't confident. And I was trying to figure out, why was I not confident? Like, why? Like, there are clues here for this downtrend. Even, like, there's plenty of clues right here. Why didn't it work? It's the bearish engulfing candles is what stood out to me the most. And the break of the new low. So it's like bearish candle, bearish 4-hour candle, break of the new low. It's like, even if it feels aggressive, it's time to give it a shot, right? This 4-hour close below 250 is like, okay, do I want to be early to the party and try to push this down below this, because if I do push below this, I'm probably gonna hit there's plenty of room to hit the 3,000. There's plenty of room to get to complete a big quarter from here. But I'd be early to the party looking at only this. I'd be like, all right, 4 hour close below, take it below, which is textbook strategy. It's just part of the textbook strategy I forgot. 4 hour close below, take a shot. Um, take a shot to complete the next quarter even lower. Um, and then obviously that would have worked. Uh, what was going to be the next one? The the alternative being um, uh, take a sell stop order at the 175 to be quote unquote safe. You're that For that move, you're playing it such that like your statement is okay. If this breaks, I'll go down. If this breaks, I'll take the quarters down. Um, I won't wait for a retracement. I'll just take it like I'll wait for this to break, and hopefully that's going to push it down. And that would have either I don't think that would have actually that might have stopped you out because this candle could have taken you in and then brought you back out. So that's I don't know. It's quote unquote. That's why I say it's like put air quotes. Like you think it's safer, but sometimes it'll get you in and then come back to the quarter, and the retracement is what would have actually been safer. So kind of a gamble as to what style of entry you would have, but just textbook quarter entry would have worked perfectly here. Same thing over here. You have a 4 hour close below the 33,000. That means give it a shot, like to the closest quarter. This is the aggressive trend bandwagon jumping, like jumping on the trend bandwagon type of style, and I haven't been doing that, and I should have been doing that. I mean, it's not like I didn't know. It's that I just kind of forgot. I wasn't looking, and this is part of what I was doing yesterday, just to um, kind of just refresh and brush up on what am I missing, because I know I'm missing something. I just didn't stream about it yesterday, and this is so this one would have worked beautifully as well. And of course, like to spot reversals are going to happen a lot quicker, and I would need to spot them on the hourly or 30-minute for my style of spotting reversals. It's not the only way. It's just for me the most reliable way for what I do. So then, of course, we get down here. Um, where we go to what I talked about in the very beginning is like, okay, now I'm spotting some 30-minute reversal signals here. It chopped around for a bit. It didn't quite reverse as quickly as I thought. I needed to have more leeway. And so this is where it's like where I'm doing a reversal. When I'm jumping on a trend, I can be more aggressive and jump on sooner and set my limits closer to a current price. When I'm doing reversals, I got to be more give it more room and and be more conservative, stay further back, and try to enter from further away because it was too close. I was unnecessary losses. Um, I'm still glad that I got it back in. I made the appropriate mental adjustment of being like, you know what, I'm still confident about my assessment here. I want to take the 750 to 3,000 all the way up, and it worked. What didn't work was I had a limit order to sell the 33,000. I get caught with this quite a bit. This is another thing that I maybe want to explore changing. Is I get caught with this quite a bit, whereas I have the limit order sitting there for a while, but it gets broken because trend changed. So some of the orders that I just leave there for a while and I just leave it as good to cancel, they end up working when the trend doesn't change. But this time that we did have a trend change, and so I have to be more careful about that. I don't really know how to deal with that yet, though. So for the for foreseeable future, I might leave that, but I'm not sure. I'm not sure about what the adjustment to make here is. I mean, I don't want to make too many adjustments at once. Um, I want to be mindful of, like, bandwidth, mental bandwidth, and mental resource allocation. So these are the kinds of losses, like, I don't mind taking because I'm placing them at, like, strong areas. Like, if you're gonna break through a major level like that all at once, it's like, oh shoot, okay, be my guest. If you're gonna be that strong about it. But typically, like, I'm okay setting a limit in either direction at a level that's this strong without that much conflict. That's how strong I believe the psychological numbers to be. So I'm wrapping up like 2 to 3 days worth of analysis and findings in one session to make up for previous missed streams. But that's about it. I'm gonna be looking at the uh, I'm looking for longs now, and if I could have a decent, okay, I guess I can sort of deal with. Okay, I can sort of deal with it if it's on a daily chart, because the daily chart, it only has one bar still printing. If this candle ends up becoming like a bullish engulfing candle, so it closes above here, it closes above 33,130 maybe, I will start looking for longs. I think that recently, since this month, we've had a lot of fake bullish days, followed by really, no, preceded by really bad days. So these bullish candles look like bullish engulfing candles that want to push the market up, but it can't. I think there's just too much selling pressure. So on a fundamental level, on a macroeconomic scale. So I'm gonna look for it to go long, but I'm not gonna look for it to break, like, make new highs above here. That's silly. I'm gonna look for it to get to at least the 250 and then reevaluate maybe the 500. But I have limits at the 250 and the 500. This is what I was just talking about. I'm okay leaving these there, even though if you're gonna, like, just slice right through it with that much strong momentum, like, I'll take my chances. I already had a run in with that. I already had experienced that at the 33,000, which is the strongest of the three. So, but I don't know how much bullish momentum this thing can possibly have. So I'm okay leaving the 250 and the 500 levels there. So that's it for today, for the week. I want to do another thing where I evaluate all of my all of the previous week and compare that to the trades that I took and didn't take, because that's something that that's a practice I want to start getting into, because it's good to know on a healthy level, on a healthy mental level, to know what you did wrong. It's easy to slip into, like, revenge trading as a result of that, or it's easy to slip into giving up or throwing in the towel, or overcompensating when you see so much of what you did wrong. But which is why I've refrained from that in the past. But in this case, I think it's time to, like, take a look in the mirror, so to speak, and take a look at all of the trading activity, what I should have done and what I shouldn't have done. Not just on a daily basis, but on a weekly basis. So we'll probably incorporate that soon.